Hello everyone. We are down now to the last few steps of the accounting cycle. We will be closing the books, and in order for us to close the books, we have to recognize the permanent and the temporary accounts because the permanent account will stay up until the next accounting period, while the temporary accounts they have to become zero. Their balances rather should become zero. So we will do that in reversing of the accounts a little later. But just to give you a recap of what a permanent account is and a temporary account is, a permanent account, this is what you call the balance sheet account. These are the assets, the liabilities, and the owner's equity. Now, temporary account, we have the income statement accounts such as revenue and expenses. So the one that I have highlighted here, we will turn their balances into zero through the process of reversing the account. So we have four steps. First is to close revenue to income summary. The second step is to close expenses to income summary. Third step will be to close the income summary to owner's capital and to close owner's withdrawal to owner's capital. Now, in the T account that you can see here, it will show you the balances or the final balance of an income summary and the owner's capital's beginning balance. And the goal here is to get the ending balance that we can transfer in the post-closing trial balance. Okay, so let's start with closing the revenue to income summary. So if you will notice, we only have two revenue accounts here, the service fees and the rent revenue. Normally, the normal balance of service fees and rent revenue, since it's considered to be an income or revenue account, it's on the credit side. In order for us to turn its balance to zero, we have to reverse it. Now, the balances of service fees and rent revenue will be on the debit side. Okay, so let's do that. Let me add one column here. Sorry, one row rather. So let's put here service fees and then rent revenue. Okay, and ta-da. And then after that, we will write on the credit side income summary. Okay, so, okay. And the amount of service fees here is 718,000, while rent revenue is 12,000 pesos. So that's it. Now, how do we get the income summary amount? We will just simply wait a second. The income summary amount will be the addition of service fees and rent revenue. So let's sum it up. Okay, and there you go. Okay, so 730,000 pesos. Now, we will be transferring the balances of income summary. We'll put that on this part. So let's put here 730,000. Okay, and then after the first step of closing the revenue account to summary income summary account, the next step that we will do is we will be closing the expenses to income summary. So to identify, these are the expenses that we have: salaries expense, rent expense, and so on and so forth. The normal balance of an expense account is on the debit side. So we will be switching it, putting its balance to the credit side. Now, income summary will be debited. Okay. And the rest of the expenses account will be credited. So this is how it will look like. And then after that, you have to sum up, not sum up, you have to transfer the balances of the expenses account to the credit side. And then you have to sum it up, and that's going to be the income summary amount, which is 500 pesos. So technically, the total of all of these expenses is equivalent to 608,500, and we will transfer that here in the income summary T account. Okay, I hope that you can still follow. After closing the expenses account to the income summary account, the next step that we will do is to close the income summary to owner's capital. So what's the income summary? Where will we get it? Usually, you will be able to get it in a 10-column worksheet under the column of income statement. You will see there if there's a net income or net loss or break even. But since we don't have that right now, in order for you to get that, you will simply add the income. So how much is the income? Okay, the income here, the total is 730,000. So that's 730,000. And after adding all the income, you have to add all the expenses. Okay, and okay, let's sum it up. Let's add the expenses here. And ta-da! Now, after doing so, you will either get here net income, net loss, or break even. Net income if the answer is positive after deducting the expenses from the income. Net loss if the expenses are more than the net income. Okay, or if you have a negative amount after subtracting expenses from the income. So we'll see how it will go. So technically we have here, okay, and okay, so we got here 121,500. So this is how you will write it in this specific closing of entry. So income summary of 121,500 and Tanner Capital, because the capital here is under Tanner's name. So please don't mind yet the capital that we have here. It has nothing to do with closing income summary to owner's capital. We will use that balance a little later. So we're going down now to the last step of reversing the entries. We will be closing the owner's withdrawal to the owner's capital. Similar to what you did in revenue and expenses, wherein you closed or you reversed the account, you will also do that in the owner's withdrawal or owner's drawing. So the normal balance of owner's drawing is usually on the debit side, but this time you're gonna put its balance on the credit side, and you are going to put Tanner's capital on the debit side. So there you go. Now Tanner capital is 10,000 pesos. Okay, oh, sorry, 12,000 pesos rather. And 12,000 pesos is the Tanner drawings. If you will notice, the drawing here or the withdrawal of the owner is 12,000 pesos. Now, what we're going to do next is that under the income summary, we will put the 121,000 here on the debit side of the T account. If you will notice, we have to compute for the final balance of the income summary. Again, the goal is to make it zero. Let's see if it will become zero. So 608,500 plus 121,500, it's equivalent to 730,000. And then 730,000 minus 730,000, it's equivalent to zero. So we're able to close it. Now, moving forward, on the last two steps, we will be transferring the we will not transfer, rather we will get to know the beginning balance, and the beginning balance will be coming from the adjusted trial balance. That's the 378,300. Okay, so yan. And after which, we will be adding, since we got a net income, and if you will notice, Tanner capital is located on the credit side, so we'll move the 121,000 on the credit side of the owner's capital T account. Now, if you also notice, we have here Tanner capital of 12,000 on the debit side. So we will transfer that 12,000 on the debit side of the T account. Okay? So now, we will compute for the final balance or the ending balance. The ending balance will be transferred to the post-closing trial balance on the side. So let's see if how much will it be. So 373,800 plus 121,500 minus the 12,000 owners capital on the debit side, you will get an ending balance of 483,300. So now the next goal is to transfer that 483,300 to the post-closing trial balance. So by the way, all of these accounts, these come from the adjusted trial balance. So up until the unearned rent, you can just copy it and paste it. And then what will change there is the Tanner capital. So from 373,800, the ending balance now is 483,300. Now, the goal of the post-closing trial balance is, of course, to see the debit and credit if it's equal to one another. Let's see if it's equal. Okay, so if you have followed the steps religiously, correctly, you will end up closing the trial balance equally. So the final balance now of debit and credit for the post-closing trial balance is 544,200 for both debit and credit.